Hey guys, so today I'm going to show you how to quickly and simply backtest your trading strategy. We're going to use R multiples for our backtest. So if you don't understand what an R multiple is, then I have a video on it. You can go and view that. I've got the link below this video. But to quickly explain it, an R multiple is simply the distance between your entry price and your stop. So if your distance between your entry and your stop is 30 pips, then 1R equals 30 pips, 2R equals 60 pips, 3R equals 90 pips, and so on. So we measure our backtest in terms of R's. It keeps it nice and simple for us. I've got a simple set of rules here that we're going to use for our backtest. This is just to show you the process of how our backtest works. I've kept it very simple. It's not necessarily a complete trading strategy, and we'll see if it makes money or not by doing the backtest. The first part of our rules is our entry. So what I'm going to do is I'm going to use the super trend indicator on the 3x7 settings, and we're going to look at what happens on crossovers of the super trend. We're going to put a trend filter in place, so if the price is trading above the 200 period moving average, we're going to buy. If it's below the 200 period moving average, we're going to sell, and we're only going to take the first 2 trades each day. And I'll show you how to set this all up on your charts in a second. Next, we're going to add a stop loss, and the stop loss is 3 times the average true range. Again, I'll show you this on the chart. And finally, we have some simple exit rules. So we have 2 exit rules that we're going to use in this backtest. One is a crossover of the super trend, and the other one is closing before news events. And I'll show you how to see this on the charts too. Okay, let's dive in. So I'm using 2 things for our backtest. The first of these is TradingView. TradingView is very good, and you'll see why. And I need a simple spreadsheet to record my results. So I've got here a Google Doc. And we just keep it really simple. I've got a column for winning trades and a column for losing trades. So we configure our charts. I need to add my super trend. I've got that here, so just going to turn it on. Add my moving average. Right, I've also got my ATR stop set up. So my one ATR stop is this red number here, just for reference. And we need to add a couple of other things. So I'm going to go into the settings, and I'm going to put on economic events, because one of our rules is closing before events. And I'm going to put on session breaks, because we're taking the first 2 trades each day. And then I'm going to click OK here. All right, so we've got our chart set up. By the way, if you want any of these indicators, you can get them in a link below the video. They're all free. Now, what we do, we won't start today, we'll start yesterday. This is a 15-minute chart, by the way. You can change the time frame if you want to test on a different time frame. So very simple, we can see yesterday, this is the start of the day, that's why this blue line is useful. It's the start of our day, we're taking the first 2 trades a day. And remember, we're only buying when the price breaks above the super trend. So this is the level here. And we'll, just for the sake of simplicity, we'll trade it when the price actually closes over. So we enter here, but we'll exit when it touches. All right. So this is our first trade. The price is above the moving average. We had the break and close. So this is our entry price. And it went down and touched the super trend. So that's our exit price. And we had a stop on this at this point in time. Here you can see I'm hovering over the candle, and it's showing 38 down the bottom here. Okay, so as I hover over the candle, it shows me what it is for that candle. So I just need to check that. Right, so we get our measuring tool, and we measure the distance here between here and here. So that's 15 pips. Okay, and our stop was 38 pips. So to calculate our return on this trade, we can bring up a calculator. We do 15 divided by 38, and it gives us 0.39. I'm going to round that up to 0.4. So this is a loss of minus 0.4 R. So we add that here. You can go back. We only had the one trade on the day. This is too late in the day to count. Hey, so we then have our next day. We go, here's the start of the day. We're above here, so we're buying. We enter on the close of this candle and we exit on the low here as the price touches our stop. That's minus 25 pips. Our stop was 28 pips. So I'm just going to round that to be minus 1R. Just not going to be super precise. And then we had our second trade of the day. And we entered here. And 38 pips. And we exited just before news. Say 2 candles before the news. 75 pips. So we can calculate this as 75 divided by 38 equals, so let's say 1.9. Just going to round it down. Got a 1.9R winning trade. And then we can go back to the previous day. Okay, so we're still above the moving average. And we entered here. This is our entry. Our stop was 36 pips, which didn't get hit. And we had around 23 pips profit. So it's about a 0.6R winning trade. Okay, I'm just doing the numbers roughly for the calculation. Okay, there's no more trades that day, and then we can go back to the next day. So here we had a breakout. The price broke out here. It's above our moving average. So we're buying. And we had a 36 pip stop. And we closed here at 95 pips. So we can work out what that is. 95 divided by 36 equals 2.6R. 2.6. Okay. There's no more trades on that day, so we'll go back to the previous day. And right, so we had no short trades. Super trend and price just above the moving average here. So we do get a trade. 38 pip stop again. And we get 18 pips. So that's 0. Wow, actually we closed a couple of candles before the news. So we should be about 35 pips. So let's just say a little bit less than 1R. 0.8. Okay. And we can then go back to the next day. Okay, so there's no trade here. Okay, we get our first trade. Over here we enter, again above. We have a 47 pip stop today. And it goes down, hits our stop, we lose 18 pips. So that's about a minus 0.3R loss. You can see I've done this lots of times, so I can just calculate roughly the numbers. Here we have the next day. Fortunately, we missed this trend. Wasn't our rules. And the previous day, we had we're below the moving average. So we're looking for a short trade. The price closes below the super trend. We have a 43 pip stop and a couple of stop just before the news. You can see the news event there, line on the chart. So we had 95 pips. So it's about 2R. Let's just say 1.9. Okay, and then we go back to the next day. Okay, we're looking for another breakout. We've got the crossover of the super trend. And we have a 47 pip stop here. And we exit just before news. So just before news. So we're maybe 0.5, 0.6R winner. 0.6. And we can go back to the next day. Okay, this one happened early in the morning, so a little bit too late in the day for me. Unfortunately, we would have missed this trade here. But here is the previous day. We had a short trade, and we had a stop at 36 pips, and we have this nice trade, and it goes down. Let's exit before news. So we had around a 160 pip winner. So that's 160 divided by 36. The number's getting a bit big on me. So we had a 4.4R winner. Right, so you can see trading strategy is looking good at this point in time. Okay, we can go back. And the next day, there was no trade. This happened, you can see the start of the day. This happened a bit late in the day, so we won't include that in our results. You can define the exact time if you like. So here we have a break. So this is early in the day. So does that hit our stop? We've got a 40 pip stop. So yes, it hits our stop. So we've got a -1R loser. So we'll go add that into our results, -1. And we then have another trade for that day. So we enter here and we are stopped out here. So it's -16 pips. So it's about a -0.4 trade. Okay, we're not going to take any more trades. It's just 2 trades today. Right, and the next day, so we're still below the moving average, so we're selling, and we get a trade here. So we enter here, and we have a -45R. So it's like a 0.9R loss. -0.9. We'll do a couple more. So over here we have another trade, and we have a 42 pip stop, and we get stopped out for 16 pips, so it's -0.3. And then we do have another long entry on the same day up here, and that is 50 pip stop. So we get stopped out for 25 pips, so it's a -0.5R trade. Yeah, and we can keep going, looking for trades. So as you see, you can just keep going and adding to the results. Okay, so I'm going to show you here just how to quickly analyze these results. So I can highlight them down the bottom. That's why I like Google Sheets. You can see this here. So we've got account, we've got some stats. So we've got account, so we had 15 trades. Our maximum winner was 4.4R, and our maximum loser was -1R. And our average, and the average or the expectancy was 0.5R. And of course, the total, we had a total of 8R in profit across these trades. So if we'd been risking 1% per trade, for example, we would have made 8%. So there we go, a nice quick and simple way to backtest your performance. When you're looking at these results, you're looking for a few things. Ideally, you'll have an expectancy or an average that's above 0.5. If you've got a strategy that does that, then typically that's going to be good for you. Ideally, you want to end up with a lot more than 15 trades in your backtest. So you might look for maybe around 100 trades in your backtest. There are some changes we might like to make, for example. So if you wanted, you might say, oh, well, this moving average filter is not really working for me. Maybe I want it to be a longer term moving average. So you might change the moving average length. Okay, now is that going to impact our results? Or perhaps you go, well, what's it going to be if I use a tighter stop loss? So instead of using a 3 ATR stop loss, I'm going to use a 2 ATR stop loss. Okay, we add these different rules in, and then we can rerun our results. Now, when you're doing this, you need to be careful not to what's called curve fit. So it's very easy to optimize the indicator settings so that it fits previous results perfectly. We don't want to do that. We want to have a robust strategy that works well in the future. So just avoid trying to play with the indicators too much to try and get them to perfectly fit. Also be careful if you have 1 or 2 big trades in your results that produce a lot of your profits. That might mean that your system is not that robust, it's just that it's managed to be lucky and capture a couple of good trades. What you might still do when you're live trading, but we don't necessarily want to rely on that. So that's just something else to look out for. Okay, thank you for your time today.